Hello all, I'm Bob Pisani. Welcome to Etf Edge, your go-to place for everything exchange-traded funds. Would you buy a FOMO ETF, a fear of missing out ETF? We're going to find out today. We're going to be talking with Matt Tuttle from Tuttle Tactical Management. He's got a FOMO ETF. There he is, in registration right now. Also joining us, Sylvia Jablonski, Chief Investment Officer at Defiance ETF. Clean energy, very hot. Hydrogen, she's got a new hydrogen ETF, HDRO, just came out last week. She'll tell us about why she thinks hydrogen is the hot investment idea for 2021. And Harry Whitten, my old friend from Old Mission, also joining us with a perspective on ETF trading trends and his general observations on the business. Matt, everybody's trying to capture this crazy nature of the markets. I said it's like having a bowling alley installed in your brain, being an active stock trader these days. So you've got value stocks, you've got growth stocks, you've got the reopening trade, you've got tech stocks, you've got the Reddit play, you've got Bitcoin floating around out there. You have proposed a FOMO ETF that I think is very interesting, that might be capturing the zeitgeist. I'm not sure how it works, and that's why I want you to explain it to us. Now, we've had a momentum ETF, the MTUM, that rebalances twice a year. We've also got a buzz ETF. We had Jamie Wise on a couple weeks ago that rebalances monthly, that primarily looks at social media. Now you're proposing a FOMO ETF that can buy anything, you say, that rebalances weekly. Explain to us how this is actually going to work. How are you going to decide what to own?
So the first thing we're going to start with is the entire universe of whatever is currently hot. So, why we have that flexibility is I know what's hot today, but I don't know what's going to be hot 3 months from now next year. So right now, the portfolio would be able to choose. It would have SPACs. It would have, innovative technology. It would have momentum stocks. It would have, what's hot on social media. And that would be the universe of what we would start with. And from there, we apply quantitative models. So we're applying a trend following model where what we want to do is we want to take the stocks that have been the hottest over the intermediate term, because typically what you see happen is what's been hot continues to be hot. Objects in motion tend to stay in motion, but then we want to combine that with a counter trend following model. So with that, what we want to do is we want to take the stocks that have done the worst over the past couple of days, because typically what happens is those stocks get oversold, and then eventually you see money start to flow back into those. So we're going to have both of those models running at the same time, and those two types of models tend to smooth things out quite a bit.
And it seems like a very critical part of this is that counter trend piece. That I don't know if you call it reversion to the mean, but that's how you capture, I'm guessing, the sudden rebounds, this dizzying change in pace where all of a sudden one day growth's hot, next day value is hot, or tech's not hot, and transportation stocks are hot. By partly owning stocks that are unloved and that you're anticipating will bounce, you can capture the rebound a little more smoothly. Is that the idea?
Yeah, and that's really huge. I mean, that's a big part of it. And we've seen that in the stock market recently. I mean, people will ask me, hey, Matt, what's the NASDAQ going to do today? So it's going to be up. All right, well, why? Well, because it was down yesterday. It's really, the markets move like that a lot. So, trend following and momentum is great until it isn't. And so, that counter trend piece is vital to really be able to smooth out the returns.
And when you say you can own anything, you mean anything. Could you own Bitcoin, for example? I mean, is that a possibility?
It's not in the basket right now. We certainly have the flexibility. I need to wrap my head around how Bitcoin can't eventually one day go to zero. And if I can wrap my head around that, then Bitcoin is something that, we could be in. Certainly, we do have blockchain. Since I've been running the model in a personal account, we've had things like Riot blockchain. I think we just got out of that today. But, we can have the blockchain companies. Bitcoin, I got to get sold on first.
Okay. Harry, what I find very interesting about all this is the the effort by the ETF community to sort of capture this crazy trading market that we've had. So I think that it's noteworthy. The Momentum ETF rebalances twice a year. The Buzz ETF rebalances once a month. And now Matt's proposing an ETF that rebalances once a week. You see where this is going here. What do you think of these efforts to sort of capture the zeitgeist?
Yeah, I mean, it's an interesting idea that Matt has. But his idea is definitely new. But there's a lot of funds out there that trade weekly. There's, the active funds, as we all know, we've talked about ARK on this show many times. They can trade daily. So it's not nothing new where somebody's going to go in and rebalance. And you talk about MTUM. MTUM is scheduled to rebalance twice a year. But if signals hit, they do trade in between their semi-annual rebalances if they have to. If the quant numbers hit, they trade. So it just makes sense that ETFs are doing more and more rebalancing.
Yeah, I mean, that's a very good point about MTUM. They could have, I don't know what you call it, a special rebalance, but you're right. They're not necessarily set to twice a year. But my point, Harry, is ETFs seem to be responding to the need to respond to the trading situation faster. Is this good or bad news, Harry, for that we're chasing FOMO to begin with? We're even having this discussion rather than trying to figure out what's, standard, Vanguardian, Jack Bogle kind of things that essentially we're just talking about, how fast can we move in and out of stuff no matter what is popular. Is this a sign of the times? Certainly, but is this good news or bad news we're doing, even having this discussion?
Well, yeah, I know that's hard to say, Bob. I mean, Old Mission as a market maker, we make markets in every ETF. Somebody launches a fund, we're going to make a market in it. If people are going to buy it, that's not our decision. We don't market the products. There's always stuff that open up every day that somebody looks at it and goes, I don't believe this is launching, and the next thing you know, it has $1 billion in it. It's just people. If people want it, they'll buy it. I guess that's the easiest way to say it.
Yeah. Matt, is there a minimum market cap in this? I ask because people have already asked me, I have people email me saying, I just want to know what's the next Reddit stock. I don't really care because I'm not interested in fundamental analysis. I just want to sort of get on the zeitgeist here and, figure out. But, of course, those are possible to spot ahead of time, right? I mean, what do you say when people say, I really just want to get on the Reddit bandwagon, whatever, I don't care what stock it is.
Yeah, so I mean, no minimum market cap, but obviously being active traders, we're going to be cognizant of that. And as far as, the Reddit bandwagon, our answer to that would be, yeah, you can have some of that, but we're going to look at weighting things. For example, our weighting scheme weights things based on volatility. So, the models had GameStop in there, or not GameStop, AMC in there for a while, but it's been a 0.6% position. So if it does go to zero, you might not even notice it. And so, so we're going to be in those types of stocks, but we're not going to be, 10, 15, 20% in anything like that. Right.
Now, this is not trading yet. This is in registration. When do you think this might become active? When would it might, be able to trade?
We're hoping mid to end of May. That would be our hope.
Mid to end of May. Okay. Great. Keep us abreast of what's going on. I think it's a great idea. I'm not sure about long term about how it'll work. I'm dying to see how you'll maneuver in and out of these many different asset classes. I want to just move on and talk about clean tech because that's a hot topic. We've got Sylvia Jablonski here. Sylvia, clean tech was hot in 2020. The ETFs around it, thematic tech, thematic clean energy, are hot again in 2021. You've got your hydrogen ETF. It just started trading, HDRO, last week. Just lay out the case for hydrogen. Why you've been very emphatic that hydrogen is overlooked. Hydrogen is going to be one of the big clean energy plays for the 2020s. Give us the 30-second rundown on why you believe that's going to be the case.
Absolutely, and thanks for having me, Bob. So, 90% of the world's energy consumption right now is provided by fossil fuels, and fossil fuels are, as we know, non-renewable, harmful to the environment, and contribute to global warming. So, as natural reserves dwindle and the populations grow, there's this need to find a clean, sustainable energy solution that'll meet our energy demands. And none of the existing alternative energy sources out there now, like solar, wind, or biomass, are able to provide sufficient cost-effective energy supply, so enter hydrogen. So hydrogen right now is at about 200 billion of investment. It's Bank of America recently estimated that it could grow to 11 trillion of investment. So 2.5 trillion of direct revenues by 2050. I think it's just a massive investment opportunity, and it's now a practical energy source, which could end up being 25% of our energy needs.
What can run on hydrogen right now? I mean, golf carts. I mean, tell us what's feasible to run on hydrogen.
Yeah, sure. So you'd be surprised, actually. There's a lot running on hydrogen. There are about 14,000 vehicles running on hydrogen through the use of fuel cells. You've got hydrogen-powered forklifts, and companies like NASA, Amazon, Home Depot, Boeing, Walmart, BMW, just to name a few, are using them. And sort of as they strive to become carbon neutral, there are buses running on fuel cell technologies, hydrogen energy basically there. We're talking about the Olympics in Japan. They're talking about having all of the buses run on fuel cells now. So just about anything and everything you can think of, on-site power generation, long-duration energy storage, all of it actually exists, and it's just growing and growing as the technology becomes more sophisticated and it becomes cheaper to do it.
And can hydrogen compete against electrification or solar, for example? How does the cost stack up right now?
Yeah, so basically, it's thought that the costs now will be 50% less within coming years. So it has, to your point, it has been more expensive, but the costs are actually coming down as more and more companies come out and sort of figure out how to produce it, how to store it, how to extract it, and it's really it's sort of a simple process, right? It's electrolysis. It's a chemical process that's hydrogen from water using electricity, and after it's made, it can be stored. So once it's stored, it goes to a fuel cell for transfer of energy. The fuel cell separates protons and electrons. The electrons pass through a circuit, and they make electricity. And the byproduct of all of this is water, which obviously is not, a gas or carbon or some sort of pollutant. So the costs are essentially coming down, and they're thought to be basically cut in half as years go forward. And the storage is also becoming more efficient.
Right. So the glide path is kind of like solar. I mean, several years ago, it was considerably more expensive than, say, even natural gas. And now it's come down so dramatically that it's actually at least equal or cheaper than natural gas. You think hydrogen is going to have the same kind of glide path in terms of costs?
Yeah, absolutely. And, the difference is it's the most abundant element in the universe, really. So it can actually provide enough energy that we need as our population grows. So that's sort of the difference between solar. Solar and wind are just amazing alternative energy resources, but hydrogen can really take scale and provide, up to 25% of our energy needs in the future. So there is a huge difference there in terms of just like the investment opportunity and the impact of hydrogen.
The one thing I've noticed is still a dearth of investable products. I mean, I just look at what you own here, and there's really three companies that are 30% of it: Plug Power, Fuel Cell, and Ballard Power. If you add them up, they're like 30% of the whole thing. This seems to be the same problem we had, years ago with certain things like solar, where there's not a lot out there that's close to a pure play. I know there are peripheral companies that get some elements from this. Is that going to change?
I think, I definitely think it's going to change. And one of the important things to think about is when we built this ETF, we also wanted to provide, products that are, have pure exposure to hydrogen and fuel cell, but B, that are liquid enough. We don't want the investor to get nailed with products that perhaps, don't trade, don't have any market cap, and are highly, highly volatile. So, you definitely have a smaller basket here, but as these companies grow and, sort of like more companies come into the marketplace, the ETF could potentially expand. But if you look at just like the opportunity here with the recent value rotation over the past month or so, some of these names have been down 30-40%. But like year to date, they're up over 50%. Fuel Cell, Plug, for example, Ballard Power, ITM. I mean, some of these names are just like absolutely crushing it. And I think with the recent rotation, they've been great opportunities for investors to get exposure to the space.
Yeah, Plug Power has been an absolute monster. I mean, that's just been a total darling of the clean energy crowd for more than a year. Sylvia, while I have you here, you also run the.
Yeah, just to that point. I mean, no one knows
Tell
what
them.
it is. You know, if you talk to people like, well, what do? Well, they use hydrogen to power forklifts for companies like NASA, Amazon, Home Depot, Boeing, Walmart. Like these are massive companies that are adopting plug power technology. So it's an actual thing that's being used in the world.
Yeah, it's wonderful to see this finally take off. It's wonderful to see a chart of the energy output of a solar cell dramatically go up. It looks like this, and then the cost of that cell like that going dramatically down and competing against natural gas, for example. I mean, it really restores your faith in technology and the power to make things more efficient. The technology improves and the costs go down as the technology gets better, and also manufacturing costs go down because you get bigger scale. It's really, a classic situation of a new technology disrupting an old business. And now you got companies, oil companies talking about, we're not oil companies, we're energy companies now. And it's wonderful to see it's really now real and taken off. I think it's very exciting. Well, I got you here. You run the 5G ETF also, that FIVG is the symbol there, Sylvia. Where do we stand on the 5G rollout right now? We're all waiting for it. What's going on?
So that's also something that's here in some form, but it's only getting started, right? So 5G is basically meant to support the next generation of connected technology. It allows us to globally share information, which we're doing now. It allows us to digitally connect. I would say where you probably saw it is when COVID hit and, we were all working from home and you saw that perhaps there were faster speeds and lower latencies than there were in prior years when you had to work from home. Chips and infrastructure, core equipment like Nokia, companies like Verizon, Wi-Fi, internet, all of those things work to allow us to connect, but it's just in its infancy. It's barely getting off the ground. The amount of investments continue to grow in core carriers, cellular antennas, new radio tech, cloud capacity, cell towers. And I think all of these things coming together will essentially allow us to have a true globally shared economy and will lead to continued growth in 5G. It's the future growth of communication. If you look at the classic sector, right, communication sector, it's basically Google, Facebook, and stuff like that. I mean, this is really the future of what communication will be.
Yeah. So not to be a pain, but when? Trying to explain I try to explain things like, can I explain it to my mother? And she says, Robert, what is 5G? I said, well, basically, everything's going to happen a lot faster. We'll be able to, watch things on she has an Apple phone, and she'll be able to, download things a lot faster, and the connectivity will be better. Is that a fair way to describe 5G to your mother? I mean, what would you say? And when actually will we have it? Will we have it at the end of this year?
Yeah. So, I mean, if you have the new iPhone, in theory, you already have it. So that's a great way to explain it to your mother. The ultra-band, wideband 5G rollout actually started in 2019. And right now it's available in parts of 70 or so cities. And eventually it's going to be, I think by the end of this year, it's supposed to be available in over 5,000 cities. But, you have basically Verizon has fixed and mobile 5G all over America, AT&T, thousands of cities, all around the world. So it is there. You obviously need the device that can use it, which in this case is the newest iPhone, but you explained it really well to your mother. It just basically allows you to do things faster, more efficiently, share information quickly, watch videos, get texts, lower downtimes. And but the bigger part of that is it allows things like, researchers in oncology to share information within a minute that might impact a study or a new drug or an outcome of a surgery. That's where it really matters. It matters obviously for driverless cars, for AI, for the build out of machine learning and things like that. But it's, already practically used.
Yeah, I think it would matter an awful lot for driverless cars. I don't particularly want any glitches in the communications with my car.
Right.
If there's a glitch when I'm downloading a movie, I can live with that. If we're driving 75 miles an hour on the freeway and there's a glitch in the communication system that's watching the car next to me, yeah, I have a little bit of a problem with that. So anything that will improve the technology around that, yeah. And landing planes too, folks. Yeah, you want to keep an eye on that. Let me turn to Harry. Harry, thank you, Sylvia. That was a great upload of info.
Thanks.
You watch ETF trading activity on a regular basis. You're on a big trading desk there. We've talked about clean energy today. We've talked about the FOMO trade. What else sticks out to you for 2021? What's an interesting trend? Are you seeing unusual trading activity? Just give us a quick download of what you're seeing.
Yeah, we're seeing a couple things. Obviously, clean energy is still really active. And what's interesting is the marijuana ETFs are active also, very active. Both of those ended the year very strong. And on any given day, when clean energy's up, marijuana's up. When marijuana's down, clean energy's down. It's kind of interesting how that happens. I don't know why, but it does. But inflows, we're seeing broad-based commodities get a lot of inflows. Symbols like PDBC, DBC, COMT. So people are looking at the reopening trade, they're saying, and there's a big use of broad-based commodities. So that's an area performing well, seeing inflows. Outflows, we're seeing outflows in gold and high yield, emerging market bonds. As interest rates rise, all three of those are seeing outflows on pretty consistent basis. I know Morgan Stanley downgraded emerging markets a few weeks ago. So that's really kind of what we're seeing here. The thematic ETFs are also still very, very hot. So Matt's FOMO product coming out and Sylvia's products like Hydro and 5G are really active, and you're seeing a lot of trading in those types of products too.
Yeah, I am very. One of the things I love about ETFs is they're good at capturing what's hot. We used to make fun of it 3 or 4 years ago with the pot stocks because there was nothing to invest in. They were all in Canada, but it held on. We're still waiting for the Bitcoin thing to happen, but I love thematic investing because it reflects the way people think. Nobody goes out and buys a consumer discretionary ETF. Well, you can, but you're a professional investor probably. But people like solar ETFs. People like clean energy ETFs. People like, cybersecurity. Yeah, I want to buy that. People like social media. Yeah, I want to buy that. People think thematically like this. And so ETFs follow the natural brain rhythms of an individual. Not I'm going to buy the communication sector of the S&P 500. No, nobody does that. So that's why I find ETFs so exciting. I mean, look at this. We've got a guy trying to do a FOMO ETF, which sounds ridiculous a year ago, and now it's like we're actually having a real discussion about the whole thing. So there really is, except for Bitcoin. And
exactly. That's soon. It sounds like that's going to be soon, though.
Well, we had Wisdom Tree last week filed for another one. So now, how many we got, Harry? There's got to be 4 of them, right, in registration? I think
at
right
least,
now 4.
And I think
hundreds of them, I think, by now.
Yeah, and I think somebody's bringing one over from
Sylvia
Europe.
said hundreds. God knows.
Yeah, it's happening. It's definitely happening.
So I'm very excited about the whole, prospects for 2021, particularly about the flexibility of the ETF. Wrapper. We haven't even gotten to more obscure things like active managed ETFs at all. We see a lot of mutual funds, Harry, coming and trying to essentially take the same management that they've got and active management and just put it into an ETF wrapper. We haven't even discussed that, but that's another sign. So I see the business going nowhere but up. We'll hit $6 trillion fairly quickly. We went from $4 trillion under management for ETFs to $5. I think we're nearing 6 right now, and I don't see any reason why we couldn't hit 7 fairly quickly. Any final thoughts from anybody before we wrap up? I want to just remind everybody. Does anybody have any final thoughts there? I'm sorry, somebody want to say something?
Yeah,
okay.
I think with all the new launches and I think with all the new launches and stuff, you're pretty much launching products that are going to cater to the next generation of investors, and that's huge. Nobody cares about the sort of old classic asset allocation products that is under the age of probably 30 now, and I think it's great that a lot of these products are coming out. I mean, FOMO and Hydro are huge to that audience.
Yep, completely agree. We're all on the same page on that. So that's it for this week's ETF Edge. Thank you for joining us. Great discussion with everybody. Thanks to Matt and Sylvia and Harry. And we're asking Matt to stick around. I want to do a little more in-depth comments from him on how he's going to do this momentum trading, because that's really interesting. That really gets to the heart of things. Remember, you can see all of our shows on etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the Etf Edge Newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds. Expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge Newsletter.